everyone is sitting in the shade today because someone planted a tree a long time ago. Warren Buffett. Welcome to the Guyana Dialogue. I am your host, Shamisa Ali, and it is truly a pleasure being here with you this evening. Our topic tonight is clarifying misconceptions and distortions about the Exxon contract. The Guyana Dialogue is being sponsored by a Coordinating Council of Guyanese based in the US, UK, Canada, the Caribbean, and Guyana. Funding support is by well known philanthropist Dave Narayan from Dave West Indian Imports. Please welcome my moderator for tonight, Dr. Tara Singh.
Thank you
Our
very much.
panelist for tonight, Dr. Ganga Ramdas. And our guest tonight, he is a financial analyst and president of Spherex Professional Services. Please welcome Joel Bhagwandin. Good evening, everyone.
Good
Dr.
evening.
Tara, please go ahead.
All right. Thank you very much, Shamisa, and welcome, Dr. Ganga. And
Thank you.
also, our special guest this evening is Mr. Joel Bhagwandin. He's a well known and established financial consultant, as well as you said, the president of Spherex Professional Services. Mr. Bhagwandin is one of the rising stars in Guyana academic and political circles, and we are very happy to have him here tonight with us. You know, over the past few days, there have been a lot of letters in the press about the NRA fund and people making all kinds of assertions, even allegations, and these things. So much of it stemmed from a lack of understanding of the proper content, the operation, the structure of the contract, as well as the uh, attending acts like the NRF acts, etc. But before we proceed to ask Mr. Bhagwandin to delve into this matter, I would like him, if he has any broad comments to make about the salary increases that the government just announced for public workers, public servants in Guyana. So public service comprise three categories: the central government workers, the corporation, the business, the government corporations, and the statutory bodies. Over to you, Mr. Bhagwandin.
Thank you, Dr. Tara Singh, and good evening to our viewers. With respect to the salary increase, I'll take it from the vantage point of some of the criticisms that we saw emanated from the opposition circles, that they try to downplay the increase to say that, it's paltry and the government is buying votes, and, a series of sometimes contradictory criticisms coming from the opposition, including I saw they even attacked the president. They sought to compare the president's salary with junior functionaries, to say that the president will get more in nominal terms, which means they're widening the income inequality gap between the highest earners and the lower level functionaries. But for me, that is an inappropriate comparison, because if you look at the US president, for example, the US president's salary is about 450,000 US annually. A junior functionary within the US government, annual salary is just about 40,000. A senior a senior functionary within the bureaucratic structure of the US government is between 100 to 200,000 US annually. So it's an inappropriate comparison to compare a senior official with junior functionaries. What is important is that what they have not been paying attention to or they have conveniently ignored is that since 2021, the government has committed to uh, revising salary scales. So there's two things happening. There are two things happening, or that has happened. There is the across the board increase, which to date it's about cumulatively it's about 31.5% in increases for 21. When you add up the percentage increase for 21, 22, 23, 24, 31.5%. That includes the 10% this year. The second the second thing that the government set out to do, which they have done, is to adjust the salary scales upwards for various levels within the public service. They've done it in phases. They've done it for the joint services, the discipline services. They've done it for the health sector workers, nurses and doctors and so on. And they've done it for teachers and other categories. So when you look at those upward adjustments, in some cases they move from the lowest level of the salary scale to the highest end of the salary scale. So when you look at when you take all of that into account, together with the across the board increases, and the government has also announced what would be the increase for next year because they have signed an agreement with the GPFU, the Government Public Service Union. So next year it will be 8%. So when you look at it all together, the salary increase for the for the public servants is about 81%, nearly doubling within the 5-year period, nearly doubling. And that was achieved by way of the across the board increases and the upward adjustments to salary scales of various levels, particularly the lower levels, the lower level of the junior functionaries within the public service. What does that translate to in monetary terms, in nominal terms? The public servant wages bill in 2020 was $71 billion. When you take into account the increase for this year, it has gone up to $122 billion. So from $71 billion in 2020 to $122 billion this year. Next year, it would be about 130 billion, right? So it's almost close to a $60 billion increase in public servant wages within the 5-year period. $60 billion more in public servant um, wages annually. Now that's only for the public service. If you take into account the entire public sector, the wages bill for the entire public sector, including those bodies that you mentioned earlier, the statutory bodies and the autonomous and the semi-autonomous bodies, the wages bill is about 200 and over 200 billion, $226 billion. So that is a huge wage bill for the public sector for for a budget $1 billion wages bill, $1 billion, more than $1 billion wages bill relative to a $5 billion budget, national budget. That's a huge um, wages bill. So that much I would say as it relates to the salary increase. There are progressive improvements to or progressive increases and
Yeah,
improvements towards improving
yeah.
is
I, I know that the vice president made a point today that during the 5-year term of the PNC, they increase cumulatively during the 5 term about 35% salary increase. Whereas if you factor in next year increase of 8%, that would arrive at the figure that you just quoted, the PP government would have granted almost 80% increase in salary. So, I mean, the opposition will continue to complain. On one hand, they're saying that they're worried about inflation, and then the other hand, they still want more money. You know, anyhow, thank you for that little comment. Now, the Exxon contract, although it has been in existence now from since 2016 to now, many people, especially those who write letters and make commentaries in the newspaper, I don't know if they've read the contract or what, but they continue to making a lot of spurious allegations, and much of the comments lacks understanding, a misunderstanding. They really can interpret things, and even quantitative analysis they have been doing wrong. The formulas have been set out, like in the NRF Act, which we'll talk about that later. But right now, talk about the thing now, the Exxon contract, and what people are still arguing, despite the government position, that they should renegotiate the terms of the contract despite government position. And they're even calling for a referendum on this. Well, if a referendum do happen, that'll be the first time in the history of any country that you're doing a referendum for a contract. So over to you.
Well, you see, it's not a straightforward issue. It's not a straightforward matter. And the call for renegotiation has been, uh, propagandized in many various forms because it's a popular thing. Now, since you dedicate this program tonight to speak exclusively about the contract, let me draw some important context and background um, information. When I saw a video is being circulated by Glenn Lal and his people. He make these TikTok videos every day, and he got this TikTok. He made this clip with the vice president when he was the opposition leader of a presentation he was making in Parliament in the National Assembly. And what they even failed to realize is that what a vice president said then as opposition leader in Parliament, uh, as part of his presentation, his debate in the National Assembly, he said something that flew past their head that they didn't realize, and I had to point it out to them. He said that the government then, which is the opposition now, they by signing that contract, they have effectively harmed Guyana for decades to come. That is his exact words. Well, not exactly, but the key word is harm Guyana for decades to come. Now, and they tend to ignore that. Now, when he said harm Guyana for decades to come, as opposition leader, of course, he knew what would be the challenges because it is already a contract signed by a government. And even if, for him to say decades to come, he knew since then that even if they win the next election, which was due just a couple of years thereafter from that presentation, he knew since then that it would be difficult to renegotiate the contract. So there has been a lot of misrepresentation about what the government's position was in relation to renegotiation of the contract when they were in opposition, and misrepresentation to the extent that they're saying that they did not honor their their promise to renegotiate. Now, what was said in opposition is that The first thing we have to acknowledge what he said was that he's acknowledged that by virtue of the government then signing that contract, it will harm Guyana for decades to come. So that's the first thing. The second thing is in another video clip, when he was speaking at a radio on a radio interview, he said that when we get into government, we will renegotiate all those contracts, and we will, and the president as well, presidential candidate then, when we go into government, we will review everything on the table. Now, here is where the misconception or the misrepresentation comes. Until now, people still don't understand the complexity of the industry. That they were now referring the 2016 contract is it's a singular contract or element out of a broader framework. Now, when the 1999 prospecting license was signed with Exxon, it was a total of 10 prospecting licenses that were issued to other companies that were exploring for oil in various other blocks. You had the Kaichur block, Kanji block, CGX is out there. So it's a total of 10. So Exxon Venture were the first company to have made a commercial discovery in 2015. They were the first. So until now, you still have active prospecting license out there. CGX is in some problem with the government and they're expired. That's a different matter. So when they said they would renegotiate everything, they did exactly what they said they would do. They did exactly what they said they would do. Exxon was the only company and was the only project, the Stabroek Block was the only one that a commercial discovery was made in 2015 and they moved to production. They moved to a production to production by 2019, December 2019. By the time the PPP came into office in 2020, they already started production. However, what people don't pay attention to, even though I have written many times on it, as well as the vice president spoke about it, is that all those other prospecting license, when they come for production, when they come for a production license, they would no longer get the 2016 term. They will get the new terms in the new production chain agreements with the improved fiscal terms that include a 10% corporate tax, a 10% royalty, a 50% profit, and a 65% cost recovery, down from 75%. Right? What they have done is to they have effectively renegotiated all those other nine prospect licenses whenever they come to production, whenever they make commercial oil discovery. That has never been given much attention to. So the government never made a promise and didn't deliver it. But they have to understand the intricacies and the complexities of this sector and with it, the legal framework within which this sector operates. Now, and I've said, so that's the first thing. The second thing is when you had, and I've argued this, and I saw a reporter who I do a bi-weekly program with, virtual program like this with Cordell. I made the point or prefer the argument that after the no confidence motion in 2018, and when Nigel Hughes came up with this 34 nonsense, that I argued that it was an orchestration by him to buy time for the government in office as well as Exxon. And I'm sure, knowing the type of animal, corporate animal that Exxon is globally, and and their role in many other countries in terms of influencing regime change and that type of stuff, I am convinced that they have had some influence, some role to play in delaying the election so that they could have enough time to move to production. Because, and Forest Oil, if you go back to 2020 and you check the record, Forest Oil was really supposed to happen in 2020. But they brought forward Forest Oil to December 2019, exactly 1 year after the no confidence motion. Now, the vice president does not want to ascribe this level of importance, something of significant impact to Nigel Hughes. And I would agree with him. I don't think it originated from him. He was just the medium, but there were bigger players. I'm saying that there were bigger players that influenced it. He was not the mover and shaker. He was just the medium through which that objective was achieved. And I said this publicly elsewhere. So, Forest Oil happened before the elections. Then you had the whole elections fiasco by 5 months election fiasco. So, first, the election delayed unconstitutionally by 1 year, and then the election fiasco went on for 5 months. Nearly 1.5 years late, we had an election, and the election resulted in a new government swearing in. All of this was not by accident, it was by design towards an objective. That objective was met. Now, the question is why? And the answer is once you move to production, it becomes difficult to renegotiate. Now, and I saw the same people you're referring to in the media who are writing and misrepresenting and a lot of misconceptions. They draw references to other countries without looking at the specificities or the situation of a particular country. For example, there was this African country where I can't remember the exact country's name, but the president was just elected, a young president, the youngest African president. And when he was elected, he said all oil contracts will be renegotiated. He will relook at all of it when he took over. That was his first order of business. What was not reported is that when he was elected and when he made that announcement, there was no investment decision as yet. The oil companies and the contracts that he was referring to that were on the table for renegotiation as the new president, there was not even an investment decision, neither was there, well, obviously, there was no production. They haven't started production. So, in that situation, if you have a change of government, then everything is up for renegotiation because there is no decision and there is no production. But if they had come into a situation like the incumbent came into, an investment decision was made based on the 2016 terms, and production already started, it became difficult. The same thing with Trinidad and Tobago. Trinidad and Tobago, there are some commentators from Trinidad and Tobago who got some coverage in Guyana that Trinidad renegotiate their contract, but they always ignore the details. And the details that was ignored, again, it's similar to the African country. Trinidad and Tobago renegotiated their contract when the contract expired. So they did not renegotiate an active
mm,
contract that is less than 5 years old into production. They renegotiated a contract that has neared expiration, 1 year into 1 year remaining or 2 years remaining for expiration. So these are the little
mm,
you know
mm,
technical details that are not explained properly, and it gets, even if you explain it, that doesn't get any traction because
mm,
the popular narratives prevail. right? The popular narrative prevailed. So then the other argument that I always put forward is that the government could choose to renegotiate, but pursuant to the stability clause in the 2016 in the petroleum agreement, it has to be agreed to by both parties, the oil companies and the government of Ghana. The oil company is on record saying that they have no interest in renegotiating the contract. The government, of course, they know what is the implication, and credit to the vice president. He said it since he was in the opposition in parliament that it will harm the country for decades to come. So he did not give a popular speech or a popular rhetoric. As, oh, when we go in, we will change that 2016 contract or we'll change. They never said that. They never said that we will change the Stabrook Block 2016 agreement. But they said they will change the entire framework, which they did. They came out with new model production chain agreements, new fiscal terms. They changed the law. They repealed the old law, and a series of other laws are coming, are in the pipeline, oil spill legislation, etc., amendment
Mm,
to existing laws. The whole framework is being already in the process of reform. Some have already been made. You have the Local Content Act, you have the Natural Resources Fund Act. So everything that they said they will do for the
mm,
sector, they have done it. You know, if they are to go to a referendum, and you still have to confront the implications. They could do
yeah.
what Chavez did, they could do what Venezuela did, and impose new terms on the oil companies. Then it will become the subject of arbitration. It will become a subject of arbitration. In the case of Venezuela, where a similar situation occurred with ExxonMobil and another co-venture partner. That arbitration process lasted for 10 years, and the oil companies were seeking in excess of 40 billion US dollars in compensation. Through the arbitration process, they were awarded 10 billion US dollars in compensation. In the meanwhile, production was halted for 10 years. Venezuela went on a downward Venezuela went from here straight down to the bottom.
Mm,
GDP moved from over 400 billion down to less than 200 billion.
mm,
And they have one of the worst humanitarian crises, social crisis, economic crisis. They have never recovered since that event. So there are severe consequences
mm.
if the government were to act in a certain manner. And we can't
Mm.
afford.
Yeah, all right. That was a very nice background, very enlightening. Dr. Over to
Yes,
you.
thank you, Dr. Tara, and thank you, Joel, for giving us the environment, the political process, and the political environment of the 2016 contract that was signed by the PNC opposition. Now, I take my analysis from an economic perspective when I look at the contract. So I've read the contract several times, both the Guyana contract and the Suriname contract as well. Um, what I find is there is no misunderstanding of the language of the contract. However, there are three major improprieties, I would say, in the contract. And the first one is the merging of the ownership rights with a condition of sale. So, of course, the ownership rights is that 2% royalty, but it's tied to a condition of sale. So, the question that I would have is how do we know that the quantities produced is equal to the quantities sold? Are they metered separately? How do we know that these are two? I have actual experience with bauxite in terms of trying to reconcile quantities produced and quantities shipped, destination of trade, uh, that could not be reconciled with the royalties in the treasury. So that's one motivation for asking this question, drilling down into the details. How do we meter, or are we metering the quantities produced and the quantities sold? If you want later, I could tell you the actual details of the bauxite story, but this is a very important question. How
So
do we
that's
know
so
quantities produced equal quantities sold, and are they metered, and who
Mhm.
meters them?
Okay.
that's an excellent question, Dr. Ramdas, and I'm glad that you asked the question. Fortunately for the oil and gas sector, for Guyana, is that the sector, by its very nature, and the value and the size and the complexity, as well as global standard of operation, it is a highly regulated sector. And in Guyana, it is no different. It is one of the most highly regulated sectors in Guyana. Sadly, the media is overwhelmed and the government is overwhelmed with responding to misrepresentation of facts, misleading information, propaganda, and so on. And things like this, information like this, are not given enough attention. So I'll tell you what's happening. First, according to the contract, the oil companies are required, or the contractor, for simplicity, let's refer to the oil company Exxon, which is the operator, is collectively the contract, they're referred to as the contractor. So the contractor has to produce several reports to the government, including daily production reports. So that's the first checks and balance. You have the daily reporting on production, or weekly or monthly, or whatever the case is, the production figures. Secondly, the government has its officers from the GMBS, for example, and the EPA, who make up the regulatory framework to regulate the sector. They are on site on the FPSOs to verify the, you use a term just now, the meters, to verify the operation, to verify the reading on the meters, to calibrate the meters, and so on. So we have our regulatory agencies that are monitoring on site, offshore, the operations, the production, and the meter and everything. So that's two. Thirdly, it would be difficult to, on the report on your production, or on the state, or fraudulently on the state your oil production, because unless you're moving with submarines, unless you have submarines, but the oil is shipped by these oil tankers. So one lift is 1 million barrels of crude. Now, for that lift, for that vessel, for that oil tanker to leave Guyana's water, you have another regulatory agency that comes into play. You have the MARAD. There is no vessel that could enter the country or leave the country, leave our economic zone, or uh, enter or exit our economic zone without the approval from MARAD. So all the oil tankers, so we have the reporting coming in, we have the on-site uh, verification by the various regulatory agencies, GMBS, EPA. Then MARAD has to give approval for every oil tanker that leaves this country with 1 million for every lift. So all the vessels are accounted for, all the oil tankers are accounted for, and they can't leave without the approval of the agency of the government, which is MORAD. So the government has to approve all those oil tankers to leave. So those are examples of the regulatory framework that has
Yeah.
not been given a lot of attention or being um, talked about too much in the public domain. But this is what is happening in terms of oil production and monitoring oil production.
Okay, Dr. Gang.
Now that is what is happening currently. Now moving forward, the government is strengthening that as well. So there is more to that that will come. The new head office that is being built in Ogle there, the new corporate head office, will have an operating room. So there will be live onshore monitoring of what is taking place offshore. So in due course, the government will also have a space in that room. And in due course, the government will also have their own um, instruments of measuring production, whether it's a meter or whatever you call it. So that in that regard, the government has already signaled that they're making investments towards improving and strengthening government oversight and regulation of what happens offshore.
Well, just to add to that story, I'm glad that you mentioned that there will be a dashboard because in the States I've visited oil production facilities and there are dashboards for the oil coming from Canada, Michigan, and coming to Pennsylvania. So the metering is important. But I also know that while I was at the Bank of Guyana, we did surveillance, and Texas companies from ship to shore, they had a cylinder, a false cylinder or a double cylinder in the hull of the ship, and the dipstick method that they use was to I will say cheat the government from its excise taxes. So that puts a whole bundle of mistrust on my part. I would rather see reports and or have the dashboard giving live reports. I think production seems to be okay. I've seen that messed up thing that only few specialists can understand. But you said the EPA gets reports, so that's it's a little more comforting. But with the bauxite, the destination of trade, we how do we know which country is receiving the oil? We need to know that. And we have not produced any destination of trade report in recent times from the Statistical Bureau. And that is very important because Guyana's bauxite was supposed to go to Canada and the USA, not to Belgium and Luxembourg, which I saw, and I could not reconcile the royalties going into the treasury. The second impropriety I find is Guyana has sovereign tax laws applicable to all companies. So how can the Guyana sovereign, how can a business contract remove Guyana's sovereign laws, which is tied to its constitution? That needs to be looked at carefully so that Guyana positions itself to get the appropriate level of revenues in its treasury. What is going through the NRF is savings. I leave that discussion out for the time being, since I'm concentrating on the economic effects. So the economic effects, um, to make a case that Guyana deserves its profits tax, it's because to add an extra oil industry to the economy produces other effects that the government is responsible for. And the government needs to have the appropriate level of revenue. There are economists in Princeton that wrote about this in environmental economics. The level of activities have gone up everywhere, and government revenue requirements have gone up. If government doesn't get that profits tax revenue, it will have to borrow money. So the the idea is that conditions have changed. Article 24, force majeure, covers the contract there. I would like you to, at some point, to comment on that, or to recommend that they look into that. Then the conditions that have changed is for each percentage point of the GDP that increases, there are sectoral requirements. You need additional materials, you need additional people, you need additional skills everywhere, each sector. You need more transportation, and you need more different pattern of land use. So all resources are going to be shifted around as a result of adding the oil industry to the economy. In addition to that, and what has been commented on, it's inflation. So both price effect through inflation for all excuse me, labor and materials have increased. So there is the price in effect, and there is a quantity effect. The quantity effect is materials usage all in all sectors will have increased as a result of the highest growth rate in the world. Guyana's highest growth rate. First, it started with 60%, and then it went down 40%, and it's now about 35 or 33%. Those great growth rates have implication for resource requirements. And in case any of my listener from Canada is there, they should know that Canadian regional input output analysis would address the revenue requirements of all the provinces that are impacted for each percentage growth point. So that's the second one. The third one is the invocation of the force majeure, Article 24. So those are my two other comments. If you care to, please make some comments for myself and our listeners. Thank you,
So with you're correct in everything that you say with respect to the implication on resource requirements for the other sectors, the structural transformation, which is inevitable, that is taking place very rapidly in our case. Um, with regard to which country is getting the crude, unlike the bauxite industry, the government has a little bit more control over that because their share of profit oil, well, the royalty is paid in cash, the royalty payments. The profit oil that the government collects, they collect it in the form of crude. So the government of Guyana is responsible for selling their own crude. So the government sells its own share of the crude. So we know where that is sold, whether it's India, whether it's Europe, whether it's North America. So we have that data. It may not be, probably it's not in the public domain, but the government has that information. It's government information. Exxon share, well, I don't know where they will go, but my best assumption is that Exxon's share of crude goes straight to they have their own refineries and so on. And I would like to assume that their share of Guyana's crude, most of it would go to their refinery because rather than selling it on the market, um, rather than selling the raw crude on the market, they would it would be make more economic sense for them to take most of it to their refinery because of the quality of the crude. It is a light sweet crude, so they'll get more value there for refining it, and some of it goes into reserve. So we have a little bit more control with that kind of information there.
Okay, Dr. we have a quick follow-up. I just want,
well, the Joel has given a logical explanation, but we need to know and be reassured that there are meters and that we're not just given from the sales calculation and
No, the
from the
meters are, so we don't have our
desktop.
own, no, so Doc, we
The,
don't have our own meter at this time. We are not the operator, but the meter there is verified by our regulatory bodies.
well, that's the production point, but the selling point, they could actually just calculate on a desktop spreadsheet and say, okay, this is your amount. That's it.
Mm,
So I'll leave it there because I can't verify anything like that. But I
mm,
did read the Business Week and I did monitor the bauxite
mm,
industry. I think we need to go down to details in terms of
mm,
production and the
mm,
destination of trade and be able to verify these things. Alternatively, if we're thinking about negotiations in Trinidad and Tobago, they took a percentage of gross revenue, so they don't have to do any auditing. And in Washington-based institutions had recommended that they increase their take, and I don't know if that fell on deaf ears. And so something happened in Trinidad with their oil industry because they ignored that advice to increase their take. And I'm saying the same thing. Guyana needs to increase its take through the tax system so we have a functioning economy and we don't have to use up our savings. So those letters that I wrote about 5 letters last week, and that addresses what Dr. Tara Singh had said. People are writing, but I didn't write on NRF. I don't have any problem with NRF because that's a distributional matter. But
So,
coming down to the implementation of the contract, there are conceptual matters that needs to be addressed, and we have to be uh, thorough with it. Even one lingering question, I didn't mean to put that here, is who owns those floating ships? Who owns them, or how is it paid for, and stuff like that. I wouldn't get into that, but ownership rights are important. Ownership, transformation, and profits. Three parts of a contract that are important. If the last part is the fructus, lawyers know that all the time. But when
mm.
I look at the contract, I was amazed at the mindset of the people who drafted that contract. Oh my goodness.
it was
It's
Exxon.
Yeah. All right.
I,
So I don't know how much more time do we have, Doctor? Because
Um, you just have about 5 minutes more, but I want you to give a quick review of the NRF, especially the withdrawals, because that has been raising some eyebrows in Guyana again. Got the press. People are really got a very wrong perception or understanding, or they're deliberately distorting what's happening. So if you can give a quick 5 minutes review of that, the withdrawal process in particular. I know the formula has changed, but the
no, the
review.
formula hasn't changed as yet. So it's unfortunate that we only have 5 minutes remaining. I had really want to take, so Dr. Ramdas raised two important questions. Who own the FPSOs and about increasing government stake? Um, I would have really
Joel,
want to
go
take,
ahead.
I answer it. Go ahead.
so so with regard to increasing the government stake, you you when I explained the political implications and the political maneuverings earlier in the program, you did not oppose to that. Now, in the circumstances, we can agree in principle that we want to increase government stake. So, in the circumstances, how could we increase government stake without renegotiating the fiscal terms of the contract to trigger the implications therefrom, the adverse implications therefrom? So, the government's policy is to increase production to the maximum level. So that is the first thing, to increase the government stake. So from 120,000 barrels, The target is to reach about 1.3, 1.5 million barrels per day. That would substantially increase government stake from right now about a billion or $2 billion a year, US dollars a year, to over $7 to $8 billion annually, which is double our pre-oil GDP, which was just 4 billion US dollars. Speaking in US dollars term. The second thing is right now in the cost recovery period, the net effective take is 14.5% of revenue. The 50% plus 2% royalty works out to, in terms of net effect, 14.5% of revenue. Now, when the capital cost is fully recovered, which at current price and the rate of production, you would have a shorter payback period. By 2035, all things being equal, then the government stake would increase substantially, almost almost doubling to about 30%. So from 14.5%, government's net effective take would be about 30% on average of revenue. So that is what the government has done by way of policy, as a matter of policy, to increase the government stake. Then you have the local content legislation and gas to energy, etc., to maximize the in-country value in a broader sense, not just what comes to the treasury, but to the country and the people and the private sector.
May I make a comment just right there? If we are force feeding the economy by saying, in order to balance the budget with revenue and expenditures, we have to produce more, I think that is not sound. We should look at the values that we have and balance it out, over from the budgetary side and the revenue requirements, and heed our tax laws. If we don't honor our own laws and we just pretend like we're receiving revenues and issue tax receipts, we are marking time because our revenue requirements are being exceeded by costs, both inflation and resource shifts. So we need our revenues in the treasury and the savings.
Mhm.
We shouldn't be expiring our savings. That is for all generations to use there, and the budgetary requirements could be a part of that. I'm not saying 100% should be in the savings. Some part of it could go towards the government's budget, but the use of savings should be prudent. If it's not prudent, something will happen.
So you're advocating for more taxes on it. Now, here's another interesting fact that is not often made reference to or often talked about. The Stabroek block is about 26,823 square kilometers, the largest block, and it has already been de-risked by virtue of commercial discoveries in excess of 11 billion barrels of oil. The 2016 prospecting license that Exxon has in the Stabroek block expires in 2027. By 2027, whatever discoveries is made, commercial discoveries made by then, that is all that would be the subject of the 2016 production agreement fiscal terms. The life of the production license is 20 years, which could be renewed for an additional 10 years, so maximum 30 years. So the production license for each field under the 2016 agreement is 30 years. Now Exxon wants to have about 8 or 10 projects by 2027. By 2027, the prospecting license exploration expires. Now, guess how much of the Stabroek block has been explored to date? Based on my calculation, when I look at the size in terms of hectares or square kilometers, of the production of the project development area of the oil fields, it's less than 5%. So by 2027, they would not be able to explore more than 90% of the Stabroek block. So that means 2027, when the 2016 prospecting license expired, the government will effectively get back at least 90% of the Stabroek block to put back onto the market to auction and to have new exploration license and new production license. So we have
Okay.
90% of the
Okay.
Stabroek block.
Let me make. I understand that's a valid point there. Okay, what you're saying, but we have an economy to manage.
Yes, but I'm saying to you that
Well,
that
but wait a minute, wait a minute.
yeah,
The principles that you use for stock management or reservoir management are different from cash flows management, because your cash flows depends on world market prices as well as the quantities that
correct,
you're
correct.
selling.
Yes, you're
So if
correct.
you rearrange
So
the excuse me, if you rearrange the cash flows, you can pay your taxes domestically and
you
also
but
satisfy the
we're saying we
contract
can't do
requirements.
that. There are implications. If the government is to do that, we are going to stop oil production,
Not the
go to
government
arbitration.
alone, both parties need to get together.
And it's not going to happen, Dr. Ramdas. Exxon
Well,
has
that's the
already said that.
politics part.
It's not going to happen. If it the only way it's going to happen is if the government impose it, then we move to arbitration, then we stop oil production, and then we lost $5 billion.
We're
And
not going to
five
lose
billion dollars.
their
If oil
resource has
production stops,
value.
if oil production stops, Venezuela had value
Yeah.
too when they went to arbitration. You
Okay,
Yeah.
that's
can't be
politics
political
now.
and
That's
realistic,
power
right? No, no,
politics.
no.
Oh, okay, but
The,
hold on.
the,
Let me make a point.
you see,
Dr. Ganga,
governance of a country is not just based on economics.
All
You,
right.
I could agree
yeah,
on economics,
yeah.
but that is the world that we operate in is within a
No,
So,
no,
political
but
environment. There are many,
fairness is
many,
an
many
important
variables
factor.
that you have to manage,
but
Equity is
that
an
you have to
important
contend with.
factor.
okay, but
Right?
hold on. There's an important thing here, Dr. Ganga, is that this contract was negotiated by PNC when they were in power. They they mess up this deal with a lopsided contract. Now, when you sign an international contract, people expect you as a government to honor whatever is written in that contracted provisions. They expect you, or else if you violate that or go against it, unless the two parties agree, you're going to come in
Okay.
for blacklisting. That is bad policy. So from that point of view, I'm not even talking about the stability clause. Now, PNC had made this mistake. PP recognized fully that that was a mistake. Now, you don't expect PPP to go and clean up their mess. PP has said it over and over, they can't renegotiate it. Other all new contracts, they'll impose the new terms and conditions. So, I mean, I understand that you and others, all of us would like to get more revenue, but we got to live by the consequences of our
Okay,
decision.
okay, Dr.
The,
Tara.
the
You
previous
mentioned,
government made that.
Now, here's
okay, let
another
me just,
important point that is overlooked, right? The government source of revenue is not only the oil contract, we were doing pretty well without oil. The non-oil revenue from since we started to produce oil, we have earned to date 5.4 billion US dollars. The non-oil revenue excluding oil for the same period from December 2019 to now, the government has earned 7.5 billion US dollars.
that's government's good
Almost
luck.
40%.
That's not
No, 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 no. It's not
oil
good luck. It's good
economics.
management. No, 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 Dr.
No, that's
Ramdas.
not oil
There is no such thing
economy.
as
Let me
luck.
comment
No,
on
no, 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 no.
Dr.
There is
Tara.
no
There are
such
two
thing as luck,
clauses.
Dr. Ramdas.
Okay,
It is called
There,
prudent management. It is
yes,
government's policy. It is
okay.
government economic management and model of the
it's
economy
the rice
that that
farmers.
has that
All
has
right.
yielded that result. There's
It's
no
the
such
right.
I
thing
We
as
have to
luck.
credit the rice farmers, not the government's good luck. Dr. Tara
Yeah.
mentioned stability clause. That is to calculate the taxes that were due for which they get the tax receipt. But the other part in the contract is Article 24. I think stability clause is Article 32, which you alluded to.
Mhm.
So that is to keep constant tax rates so that their tax is predictable, which is a requirement under the contract. But where there is a change of condition, force majeure, that's a French, that's not English, but it means that there are changed conditions from the initial 2016 date that the contract was signed, and Guyana needs to revisit that ASAP.
There has
Otherwise,
been no force
something will
majeure
happen.
since 2016, Dr. Ramdas. There's no
Uh,
force majeure. There's no force majeure event. And we don't want a force majeure event. Force majeure event
it's
are
not a bad thing because even Exxon itself could be in trouble with their facility, their onshore
Okay.
facilities, and the general health of the economy.
All right. I just want, Joel, before we close, to talk about this withdrawal from the NRF, because that has created a lot of misunderstanding, misconception, even distortion.
so
So
the
go.
withdrawal so what has been ventilated in the media, in the public domain, is the investment committee. A an opposition representative on the investment committee says that the fund, the investment committee and the board is a rubber stamp, and that there is no accountability of the fund. And Nigel Hughes, the leader of the AFC, said that the $5 billion in the fund is unaccounted for. All those, that's what's in the public domain, and I responded to all of them. First of all, the $5 billion in the fund, it's $5.4 billion as of September 2024.
Yeah.
60% of that money remains in the fund untouched. $3.2 billion US dollars is in the fund, is in the account of the Fed, the
Right.
US Reserve Bank. So 60% untouched. The other 40%, 2.2 billion US dollars, which was appropriated through the budget, which was withdrawn in accordance with the withdrawal formula to finance the national budget, which was subject to the approval of the National Assembly. That money is also accounted for, which the EFC, that has about 5 or 6 seats in the National Assembly, participated in the process, in the approval process, by going through, by participating in the budget debates, by participating in going through
Mhm.
all of the estimates, line item by line item, and approving that budget. Then that money is accounted for by way of the Auditor General auditing the public accounts of the country, the public sector expenditure. And again, the AFC, the opposition, chairs the Public Accounts Committee, that where after the audit report is tabled in the National Assembly, it goes to the Public Accounts Committee for scrutiny, for the scrutiny and action on the findings and so on. So for them to say that the $5 billion from the fund is unaccounted for, it's complete dishonesty. But I don't think it's just dishonesty; it's incompetence, because you just have to check the numbers.
Do
The, the sorry, go
do
ahead.
do they know how much money from the NRF funds will go towards paying the increase in salary and the 100,000 to each
So the
adult 18 and over?
2024 budget is was $1.145 trillion, just over 5 billion US dollars. The money from the Natural Resources Fund is just about 20% of the total budget. 240 billion Guyana dollars, just over 1 billion US dollars, that finance the budget from the Natural Resources Fund. The wages bill alone for the entire public sector we've already established is over 1 billion US dollars. The infrastructure budget alone for roads and bridges and sea defense, etc., and drainage and irrigation and farm to market road, the infrastructure budget alone is 240, 236 billion dollars. The oil money is 240 billion. The infrastructure budget is 236 billion dollars. The housing budget, the health sector budget is about 110 billion dollars. Where we're building five state-of-the-art hospitals across the country and rehabilitating other hospitals across all the regions, from region 1 to region 10.
No,
And we can go down the
yeah,
list.
no,
We can
that's
go
it
down the list.
specifically if you know or if you're aware what portion of the salary increase will be charged to the NRF funds
No, there is
or
no
the,
direct charge to the NRF fund. So the NRF, the Natural Resource Fund Act, first the money has to be approved, pre-approved in the National Assembly through the budgeting process. After the approval process, it is appropriated, then the funds from the NRF is withdrawn and transferred to the consolidated fund.
okay,
So that money
well,
goes into the consolidated fund, right?
well,
And the money from the Natural Resource Fund, if we go by the act, is to finance national development priorities. It is not to finance recurrent expenditure. Wages and salaries are recurrent expenditure. So wages and
no,
salaries financed from your non-oil revenue,
no, no.
right? That is why I made reference to the infrastructure budget. The infrastructure
Mm,
budget is almost 100% of the
mhm,
money that came from the NRF to finance the budget.
mhm, mhm. So, so you're saying that all the salary increase and whatever benefits
It's financed by
and
non-tax revenue.
it's not taken from the oil revenues. Okay, that
It's coming
is
from non-oil revenue, right? Non-oil
yeah.
revenue. Yeah.
Well, that is a clarification that you needed, because one of the AFC people have even argued that medicine, pharmaceuticals are being charged to capital budget, which is wrong. Anyhow, I'm glad you clarified that. Now, if um, Shamiz, we can close now, or
We have a
because
few questions, Dr. Tara.
okay, go ahead.
All right,
Few questions, Joel.
go ahead. This question is from Mike Bickham. He says, Joel, what is your take on or recommendation when the current PSA expires? What options are available in the 2027 for the government to consider?
So the government has already has already created the new framework. So there is a new uh, production sharing agreement with new fiscal terms and other terms. There is one for shallow water operations, and there is one for deep water operations, but the same fiscal terms: a 10% corporate tax, a 10% royalty up from 2% royalty, 10% corporate tax from zero tax, corporate tax, the 50% profit remain, and the 75 percent cost recovery comes down to 65%. So after 2027, when that prospecting license expire, of course, what is already in production, those production license will run into 30 years. But all new exploration and new production license, the new fiscal terms, the new production agreements will apply to those, and they will be subject to the new regulation, the new Petroleum Activities Act, etc. So the government has already developed the new fiscal terms. And like I said, the Stockbrook block, which is 26,823 square kilometers, only less than 5% of that has been explored so far by Exxon. So we'll get back at least 90% to put back
Right.
onto the market for new
Perfect.
exploration license.
Thank you. Um, I know we had an intense discussion on the NRF, but Mike is also asking, Joel, can you shed some light on the expenditure from the NRF and the regulatory framework that governs taking money out of the NRF? Nigel and Terence Campbell are parroting the expenditure expenditure from the NRF which cannot be accumulated accounted for?
So I've
Do
just
you mind
answered
repeating
that
that again?
question. I've just answered that question
Yeah, yeah,
Yeah.
when
yeah,
I gave the answer
Okay.
to that
yeah,
already. Yeah.
yeah.
Okay. So I Vishnu Mahadev is asking, what is the purpose of the NRF?
So the purpose of the Natural Resources Fund is so one of the risk that we have to guard against, that follows countries with this windfall from natural resources, is what is called a phenomenon called the Dutch disease. So the Dutch disease phenomenon is where you have a high inflow of foreign exchange into the market because we're producing all this oil wealth, we're earning all this foreign exchange. And because of that, you now have a sharp appreciation of the exchange rate. Now, if you have a sharp appreciation of the exchange rate, it will effectively cause our non-oil export sector, the manufacturing sector, their exports will become more expensive abroad, which means less competitive internationally, which means you will effectively kill off the manufacturing sector at the expense of the import sector becoming richer because imports will be cheaper when you have an appreciation of the exchange rate. Now, that is the Dutch disease, and we can't allow that to happen. So, the Natural Resources Fund serves as a stability mechanism to help to stave off the Dutch disease by way of helping to manage the exchange rate, to keep the exchange rate stable. Because all that money we've earned to date 5 billion US dollars, 5.4 billion US dollars. Now, if we were to bring 5 billion US dollars and plug it into the economy, we would have the Dutch disease. So that is why we have a withdrawal formula. We're now withdrawing all the money from the funds. There is a ceiling, and we've only withdrawn 40% of the money to date from since first oil. 60% remains in the fund to be invested away from the economy, outside of the market. So that's one of the purpose of the Natural Resource Fund. To one, help manage the stave up risk of the Dutch disease, exchange rate stability, help with anchoring our monetary policy, um, and two, it's a fund to that you then invest the remaining balance, and that's where the investment committee comes in. After you withdraw a specified sum or a prescribed sum from the fund to finance the budget, what remains in the fund can now be invested in other instruments, in financial assets, in other financial markets, in safe investments, of course, whether it's a deposit account at the Fed earning interest, earning 5% interest, or whether it's US Treasury bill or that type of stuff, right? Because the investment mandate is a passive investment mandate, which is low risk investment because we don't want to expose the fund to high risk assets, and that you could eventually suffer a huge loss, like in the case of the Norway fund last year that recorded a loss of 164 billion US dollars.
Got it. Thank you. And then we have this question from Rajendra Singh. He said, should the Guyana government force renegotiation on Exxon for a better oil contract and
Uh,
Exxon refuses? What could be the consequences for Guyana?
So I answered that
yeah,
in the presentation. I
right.
made reference to
Correct,
Venezuela.
correct.
Venezuela did exactly that. They went to arbitration. Arbitration took 10 years,
Mhm.
and Exxon was awarded $10 billion, 10 billion US dollars. So what would happen to Guyana if we have to go to arbitration? A, production would stop. If production stopped, we're losing over $2 billion a year right now. That's about 400 billion Guyana dollars a year in revenue that we would lose. Then we would lose all the local content spend, which is nearly a billion US, another 200 billion Guyana dollars in local content spend. We have about 1,000 local companies supplying services to the oil and gas sector, and the sector employs another 6,000 Guyanese. So all those 6,000 persons will be put on will be placed in jeopardy, out of a job. The 1,000 plus 1,000 odd local supplies in the industry, and losing $400 billion annually. And of course, that would spiral into a whole negative effect on all the other sectors, because that sector carries, by way of the what you call the multiplier in economics, that we will lose all of that. So all the other economies will sectors will suffer losses.
Thank you. Any consideration for a windfall tax? And this question is from Mr. Jailal.
So I've dealt, well, I haven't dealt with it here. So the windfall tax has been given a lot of popularity recently. Windfall tax. So the UK implemented a windfall tax in 2023. The situation in the UK was such that the UK, compounded by the COVID-19 pandemic, was in a serious fiscal state. And so they were in a desperate state to earn revenue to the treasury. And so they implemented, I think it was a 25% windfall tax, which is temporary, by the way. Now, the historic context background to that is that over the years, the UK has liberalized their fiscal regime for the oil and gas sector, where, for example, in 1993, they had a petroleum revenue tax of 50% that was removed, that was reduced from 50 to 0%, removing it completely in 2006 or 2013, somewhere thereabout, in the 2000s. So that is the extent to which they had liberalized their sector over the year, fiscal regime, from 50% to 0%. Then they end up in a fiscal state that was so bad that they put on a windfall tax to earn some extra revenue. So, but when you look at the net effect, to attract new investments in the UK, the incentives that they allow would offset the windfall tax, because you want to earn more money, but you also want to keep it going. You want to keep sustainable revenue, so they have to incentivize future investment dollars. So the incentive that they have is for every dollar invested in new investment, they get 90 cents on a dollar in a tax allowance. That is a very lucrative incentive to attract investment. So we got to put this windfall thing in context. So I gave you the example of the UK. Let's go to Suriname. Suriname fiscal framework has a built-in windfall profit share formula. So if you look at the Suriname formula, they have something called the R factor formula. Now the R factor formula, when it is applied, Suriname could get from a minimum of 20% profit to a maximum of 80% profit, according to that formula. But when you do the analysis and you apply the formula is designed such that when oil prices are low, the oil companies have a stability guarantee, have investment security. When oil prices are low, Suriname gets a lower profit of 20%, the oil companies get 80%. When oil prices are high, Suriname gets 80%, the oil companies get 20%. But when you apply the formula, guess at what price point that the price has to go up to before Suriname could get 70%. The price have to be in accordance with that formula. When you do the modeling, it is not until the price is $150, 150 to $200 a barrel before Suriname could get 80% profit. So right now the price is at $80. So Suriname at $80, they're getting 20% profit. So I give you two different contextual examples on
Yes.
windfall. In our case, we have a simple fiscal model, 50% profit. If oil price go up to $80 or $100, we still get the 50%, we still get windfall profit, because if we are getting 100 barrels, or let's say 10 million barrels of crude, and we get $50 a barrel last year, and this year the price go up to $100, then we can get $50 more on every barrel.
Right. Thank you, Joel. I will now ask you for your closing remarks.
So my closing remarks. So thank you very much for having me here. Uh, Not very often we get to discuss these specific technical issues regarding the oil and gas sector and the fiscal regime and so on. So I would say thank you for the opportunity to elaborate on some of the technical issues and the nuances of the sector. And I look forward to more engagements like this and very good questions from the audience, from the viewers.
Thank you so much. Thank you to our panel. Thank you, Dr. Tara, Dr.
Thank you.
Gangaram Das. Thank you to all of our viewers for taking the
Yeah.
time to join us this evening. Until next time, I am your host, Shamiza Ali, and this is the Guyana Dialogue. Good
Thank you,
evening, everyone.
Shamisa.
Thank
Thank
you.
you, Shamisa. Thank you, Joel. Thank you, Dr. Ramdas.